Hello, this session for Tolley Seminars Online is on the Budget 2015 content on business and corporation tax. This is Rebecca Benneyworth. In overview, there wasn't a huge amount in the budget relating to corporation tax and business tax generally. However, there were certain sectors that were earmarked for help by new reliefs or extension of existing reliefs, spreading out the benefit as widely as possible, both geographically and economically. The budget also included a number of measures that bear down hard on tax avoidance, and they'll be dealt with in another session of these budget seminars. So to turn to corporation tax, there are no changes to the main corporation tax rate or the basic rules on corporation tax. So we'll have a 20% rate from April 2015. We've also got a 20% rate announced for the 1st of April 2016 financial year as well. The next topic is an addition to tax-deductible expenditure on flood defences. Contributions by any business, that includes corporation tax companies and income tax businesses, so self-employed and partnerships, to flood and coastal erosion risk management projects, which are partnership projects, will attract tax deduction against their profits from the 1st of January 2015. I think that would be a welcome piece of news for lots of farmers and others affected by the floods last year. This one was announced in the autumn statement but has been confirmed in the budget. Something that's completely new in the budget is the change in relation to farmers averaging. The Chancellor said that he'd been lobbied hard by the NFU, the National Farmers Union, and he's decided to extend averaging from 2 years up to 5 years so that farmers' profits will be averaged over potentially a 5-year period. This has got a potential to be extremely complicated, particularly because of the effects of averaging on payment of tax, and that averaging doesn't alter the payments on account for one particular year. It will come through in a future finance bill and commence in 2016, and I would expect the professional bodies to be heavily engaged with HMRC in trying to get this through in as simple a way as possible, but there is absolutely no doubt it will be complicated. The next area is a corporation tax change that affects goodwill disposals. Now again, this was announced in the autumn statement, but mention of it was made in the Red Book. So my view is that it produced a negative tax charge and it shouldn't have lasted as long as it had. So as previously announced, there'll be no entrepreneurs relief on the disposal of goodwill to a company which is related to the disposer, and no intellectual property relief in the company. So the relief at deduction for amortisation of goodwill will not be available if the goodwill has been purchased from a connected individual or partnership. Those changes apply from the 3rd of December. On R&D, we've got a couple of interesting developments. First of all, as previously indicated, increases in the rates of R&D. So the above-the-line relief for large companies up from 10 to 11%, and then for SMEs, the rate of relief up from 225% to 230%. There'll also be an exclusion for expenditure which is effectively cost of sales, which is incorporated into something which is subsequently sold, and those changes all start on the 1st of April 2015. The other change on R&D, which is of interest, is a real push to try and encourage smaller companies to take up R&D. So there will be an optional advanced assurance scheme which will give assurance that an R&D project does qualify for relief, and that assurance will last for 3 years. First claims will be made from autumn 2015 that will be able to apply for that clearance, and there will be a publicity campaign lasting around 2 years, making smaller companies more aware of this relief. There'll also be guidance aimed specifically at smaller companies. So we turn to some of the less mainstream areas, so a quick nip through these. The creative sectors reliefs that we've got, and there are a number of them, most of them have had some tinkering in the budget, so changes to film production relief, high-end television relief, and then 2 new reliefs in this sector, a children's television relief which will come in the current year, and orchestra relief which has already been consulted on in 2016. Again, fairly minority area, but quick look at what's happening to the banks. Bank levy up again by a fairly considerable relative change, and they will also be excluded from deducting compensation payments from their corporation tax profits. That won't start for another year, and it's likely a lot of these compensation payments for mis-sold products will actually have been paid by then, but still their heart's in the right place. And finally on banks, they will be restricted to reducing their current profits by 50%, using up losses that have been brought forward. That will again start immediately from April 2015. Turning to a couple of other areas of mild interest, we've got some moves on international avoidance. We've got the diverted profits tax, about which there is quite a lot of concern that it's been hurried through and will be extremely complicated and not really do what it's intended. And secondly, some enabling powers to be laid to allow HMRC to require multinational enterprises to report on country-by-country basis of the allocated profit to those countries, the tax charge in those countries, and the economic activity carried on in those countries. There are criticisms that country by country gives a lot of data and not a lot of information, but it will be interesting to see what HMRC make of this. All of this, of course, in advance of the BEPS project launched by the OECD, and certainly on diverted profits tax, there is a hope that this is a temporary measure. Finally, the oil and gas sector came in for some extra boosts with some reductions in taxes, some new investment allowances and some funding for more exploration. I think a poke in the eye for the SNP, I think a highly politicised range of measures, but interesting nonetheless. Well, those are the business tax measures in Budget 2015 and the Finance Bill 2015. I hope you've enjoyed that and found it useful. This is Rebecca Benneyworth. Thank you for listening.